This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
Silver and gold are all over the place. What the heck does that mean for you and your savings, particularly if you are close to or in retirement? This is what we're going to work to unpack a little bit of today. Although when it comes to any kind of investment, I feel like sometimes there's just a cloak of mystery upon them all, Abe. This is Abe Abich, founder of Abich Financial Services. I'm Heather Branch, here to ask Abe about what we've been seeing recently to try to understand what's going on and how it applies to us on an individual level. TheRetirementKey.com is where you can go to connect to Abe and his team anytime. We also have links posted in the show notes. So let's see. How do you want to work our way through this? I mean, I've got a story. We're going to hear from a gold dealer, Max Baker, here in just a minute. But should we just start with why we would invest in gold and silver from the beginning?
Sure. Yeah. Here are a handful of reasons, five or six reasons why you might consider even buying, either physical, tangible silver and gold or maybe gold and silver ETFs.
Yep.
Number one, they're always known or usually known to be a hedge against inflation. Okay.
Yep.
Like real estate. Number two, they can be considered a safe haven. And if you're buying physical gold and silver, then they're a physical asset. So if the dollar, American dollar, US dollar, goes down in the future, becomes worth less and less, physical assets like real estate, gold and silver could become worth more down the road, right? People could place more value on those if the dollar is worth less.
Okay.
It can be a way to diversify against your cash, stocks, bonds, real estate. It's a different asset class, precious metals, commodities. It's a good way to diversify. Again, tangible. If you physically own silver and gold and other commodities, you don't have to. Again, you can buy an ETF and still participate in the opportunity there. Demand, the price of gold and silver can go up based on how much demand there is for the assets. And finally, they can also be a nice way to pass on generational wealth.
Okay.
Just passing on the physical silver and gold especially. There's a story behind all of that if you're able to keep it for the long haul and pass those assets on to the loved ones of your choice.
Yeah.
So those are main reasons. It's not an exhaustive list, but some of the main reasons why people would even consider buying silver and gold.
Sure. All right. Well, what we've seen with gold and silver prices lately has been crazy. It's obviously making a lot of headlines. With those prices, usually they go up when the market is down. I guess it kind of reacts like bonds a little bit, the way precious metals work with the market. But lately, that's not been the case. Gold dealer Max Baker was telling Fox Business that we are just another shocking global event away from prices heading much higher. This is what he said.
If we get some kind of credit event, think 2023 bank crisis, think another war, something with Iran, something with China, you could see silver at $200 in a heartbeat. You could see gold at, $8,500 to $9,000 in a heartbeat. Just, and that's looking at history. That's not just pie in the sky.
Wow, those are some big numbers he was tossing around there, Abe. And of course, we don't want to see things like a war hit or some sort of big credit crisis hit. So people who are invested in precious metals, they might be wondering, one, is the party over and I should get out? Or two, is it too late to get out? Should I just ride what's left? What else do we need to know as far as a plan with gold and silver as assets in our retirement savings?
Yeah, I don't think you want to be buying gold and silver or stocks or any investment for that matter.
Right.
If you're really not into the investment and behind the investment, and behind the why of purchasing the investment for the long haul.
Okay.
I think you should be purchasing investments, investing in investments for the long haul, not just trying to make a quick buck in a year or two, because that's where you can absolutely get burned.
Yeah.
And so with that, yes, gold and silver have been on an absolute tear. At the time of this recording, we're pretty early into 2026. Gold and silver are both up 16-17% year to date. You compare that to the S&P 500. The S&P 500 is up around 2 year to date. That's a big difference. You look at silver over the last rolling 12 months. I'm specifically speaking about SLV, the silver ETF.
Okay.
It's up about 150% in the last rolling 12 months.
Wow.
What was the S&P up in the last rolling 12 months? Well, in 2025, it was up about 17. Gold, GLD, I'm talking about the gold ETF, was up about 75% in the last rolling 12 months. You look at yes, there are some really hot companies out there, the Palantirs and the NVIDIAs of the world that could be up 70, 100, 200%. You'll see that from time to time. But the S&P and the major indexes are up, 2025, they were up in the high double digits. So gold and silver have been on an absolute tear. And, part of the reason for the volatility is just, I think the markets go up and down, and that's healthy and normal for the markets to do so. And perhaps it was time for a reset. You look at where silver and gold have gone, come from like over the last 5 years, and they've just been through the roof.
Right.
And maybe some big time institutional investors were just saying, hey, it's time to take some profit.
Yeah.
I mean, you see Warren Buffett do that, from time to time. And,
sure.
Berkshire Hathaway will say, well, they just sold, a certain amount of Apple stock or whatever it is that might be getting more concentrated in their portfolio, maybe a piece of their portfolio that's done really well, and they'll sell a piece, go to cash, look for opportunities. And I think that was part of the recent events around silver and gold, just institutional investors, maybe looking to take a piece of profit, right?
Okay.
So it was a good time for a reset. It was a good time for a recalibration, because remember, whether it's gold, silver, real estate, stocks, or bonds, these investments don't continually go straight up. That is not how markets work.
Yeah.
Ups and downs, ups and downs. So we should expect those.
Got it.
Ups and downs. Yeah.
Got it. Ups and downs come with precious metals. They come with real estate markets. They come with stock markets. They come with any investment that we have in a portfolio. So it's just to be expected. I think it's interesting how you were talking about. I didn't realize that there was ETFs that you could do precious metals or about. I mean,
Yep.
more things to know.
That gives you the exposure, to the asset class and the commodity without physically owning it. That's kind of nice too. But there's benefits and pros and cons to each, to investing in maybe an ETF versus the physical assets. So, at the point of retirement, if you're watching this video right now and you're a couple years away from full retirement, you're in full retirement, then something very important to remember is that we don't want to act emotional when it comes to our investments and our retirement plan. It's time in the market, long-term time in the market, weathering the ups and downs. So we want to try to remove emotion as much as possible. There's going to be political football. There's going to be stuff happening, wars. There's going to be things happening, with oil and all kinds of different things that could spook the markets. And that could cause you to maybe react emotionally and say, well, what am I doing? Should I also be selling or buying this investment? But sticking to your long-term retirement plan and then focusing in on your own personal financial investments is key. You want to stay very well diversified. Don't have all your eggs in one basket, Don't have all your eggs in commodities or stocks or real estate.
Yeah.
You want to stay disciplined with the risk you're taking, especially if you're close to retirement or in retirement. Prioritizing long-term goals over short-term market noise. That's that political football. Maintain discipline. And finally, again, focus in on your own personal and financial plan. Okay. Those are some key takeaways. Yes, silver and gold have had a tremendous
They're having
run.
a moment, yeah.
and maybe it's beneficial for you to invest in, things like commodities, maybe commodity ETFs as well. But make sure that it's part of your retirement plan, that it's proper for your own retirement plan. And it may not be. You may realize that you can get the returns and the stability and everything you need out of your life savings by just investing in stocks and bonds or just stocks or real estate, whatever it is. That's why meeting with a fiduciary retirement planner, they can really assess your situation and determine if what you have is proper and prudent and right for you, or if you need to make some changes.
Well, obviously, Abe, that's what you and your team are helping folks with every single day in your office at Abich Financial Services. If you are wondering about gold and silver or other investments and how to best position different investments, diversification within your own plan for your retirement, Abe and his team, they're here to help you understand what your options are, answer your questions, and begin to build out a plan that's going to give you more confidence in the years ahead, so that when headlines like crazy numbers with gold and silver start to spike up, you don't have to be concerned on an emergency level type scenario. You can have calm knowing that you've got a plan in place. That's what Abe and his team are here to help you create. So theretirementkey.com, that's where you can go to begin the conversation with Abe and his team. We've also got links posted in the show notes. Find us anytime, theretirementkey.com.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.